Hey, if you've been watching the stock market over the last few weeks, then you know everything's been selling off. Everything's been going down. And to me, everything's starting to look really oversold. That's why I'm getting really excited about starting to buy some stocks here. I'm starting to nibble on some trades here on the downside, getting ready for the next move higher. In the video, I'm going to show you the charts. We're going to look at some stocks. We're going to look at some indexes. We're going to see what's good. I'm going to show you some option plays that you can possibly get in. But I also want to show you some contrarian indexes like the Fear and Greed Index, the VIX, and show you why these things are really starting to say it's time to buy. All right, so let's just jump in and start to look at the charts. All right, everyone, Lee Lowell here from smartoptionseller.com. So what we want to do is we want to look at the charts. We want to see why things are oversold and talk about, is it time to buy? So let's jump right in. We look at the SPY first, and this is the SPY. Hang on for a second. Let me pull this down. So the SPY is the exchange traded fund for the S&P 500, and it gives us the best overall view of the market as a whole. All right, so we always want to look at the indexes first. So what you see in front of you, for those that are new here, these are the charts that I look at. Price action up here, daily bar charts, open, high, low, close bars, going back about 2 years in time. Down here is the RSI index. It's an overbought, oversold oscillator. Obviously, it oscillates between overbought and oversold levels based on the price action up here. The 80 level is my overbought area. The 20 level is my oversold area. You can change those if you wish. Up top here, keep it simple. I've got a 20-day moving average, 50-day moving average, and the 200-day moving average right here, which is basically the granddaddy of all moving averages. And it's usually the last line of support for any stock or indexes that have been coming off. Obviously, you can see here the stock market, the SPY has come well below the 200-day moving average. So yes, that can mean things are very weak, but it also can mean things are ready to bounce. So I want to show you how the SPY moves compared to with the VIX and the Fear and Greed Index, and why it's starting to tell us this could be a good time to start getting into some bullish trades. Now, as you can see here, over the last couple weeks, the market's really come off hard and really come off far. I mean, this is a big move for an index. So the last time we had a big move like that was back in August, and I'm going to show you that move on the VIX as well, here as well. But this is a pretty good move, and that drives up the fear. And the reason why this is happening, this is basically because U.S. President Donald Trump is doing his whole tariff thing. Tariffs are on, tariffs are off. So he's putting them on every country in the world. So that really scares companies, that scares investors. There's a lot of indecision out there. And so the market does not like indecision. Tariffs could act as inflation-wise, it could raise prices. We're not really sure how it's going to work out. But regardless, the market doesn't like it. Sells off first, asks questions later. But if you look back in history at the charts, you can see moves like this will always get bought back up and start to move higher for the next run higher. All right, so we want to show you some of these things and show you why it could be a good time to get long. Now, the 200-day moving average, if you look back in time, it doesn't stay below the 200-day moving average for long. This was the last time back in October, got below the 200-day moving average here, bounced back up. Here as well, this is back in March. But let's go back and look at let's look at a weekly chart here, okay? So we can see if my charts will load up here. Come on, we can do it. There we go. Come on, let's go a little bit more. All right, so we're starting to get it filled in here a little bit. So you can see now this is the weekly chart of the S&P 500. Now you can see the last time we really got below was in, okay, so this is COVID right here. And you can see how fast the market rebounded. Now, the market will always go up over time. You don't have to take my word for it. Go back and look at the charts over 100, 200 years. You can see the stock market will always go up over time. And you have to have faith that these blips down will always get bought back up. We can look back at let's go to the monthly chart here real quick, and we can look at the market meltdown in 2008, 2009. Okay, so here, the last time got down. So this is the 200-month moving average when you changed time frames. Okay, so here's the 200-month moving average. and hasn't fully loaded up yet. Must be having some slow internet issues, but you can see the market got below the 200-month moving average, got really oversold on the RSI, and then look where it's gone since then. Just up, 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 up. Here's COVID right here. Up, up, up. All right. So we just want to understand that these big moves like this, well below the 200-day moving average, getting oversold on the RSI really means that this could be time to get in. I've been actually buying the SPY since it got below the 200-day moving average. So I've been buying since like the low 570s. Now it's at 562. So I'm banking on this thing rallying here. I mean, it could stay down for a little more, could sell off more, but it really is getting oversold. Let's take a look at the fear and greed index. Okay. If you don't know what this is, you go to CNN.com, fear and greed index. Here's the address right here. The fear and greed index basically tells us how the market is feeling right now about the stock market. And right now there's extreme fear. Now this is a contrarian indicator, meaning when you get to extreme fear, that's probably the best time that you want to start nibbling on some long shares. Just this past week, we were in the low teens, okay? And when everything's going good, it moves all the way up to extreme greed. It goes from 0 to 100. When it's in the extreme greed area, that means the market's been going up. Everyone's happy and giddy. Everyone thinks, these are the best times. And that's also when the stock market starts to drop, okay? And then it swings back to extreme fear, and then the market goes up again. The other thing I want to show you is a chart of the VIX, okay? The VIX is kind of like the fear and greed index. Let's put the VIX on here, but it measures fear in the market. And when you have spikes in the VIX, all these, quick spikes tells us the market's in a quick down move. And then the market turns around and goes up again, and then the VIX comes off. So the market and the VIX move inversely to each other. So the VIX typically, 15, here's the levels of the VIX. 15 for VIX has basically been your long-term low area, maybe even down in the low teens, 12 to 13. Then when the market comes off, the VIX spikes. And this last big one right here was in August. Let's go back to the SPY here. In August, we had this down move right here. I told you I wanted to talk about that. So when the market goes down, and when it goes down fast, that's when the VIX spikes, okay? And the VIX is based off the S&P 500 front month at the money options. And it's implied volatility of those front month options. And that's how the VIX is calculated. So let me on my other chart here, I have, let me move myself over here for a second. Window. Okay, so I'm going to put the VIX on here so you can see them side by side. And give me a second here. Put the VIX on here. All right, so let me cancel this out. So here you can see how this one up here is the SPY, and down here is the VIX. So as the market comes off, you can see the VIX goes up. So we get these down moves, and you get the spike in the VIX. Down move, another spike in the VIX. You can see the VIX is already starting to come off a little bit. You can see as the market this past Friday, March 14, 2025, the market started to go up again. So you can see it moves inversely to each other. As the market's going up, the VIX starts going down. As the market comes down, VIX goes up. But the VIX will have these massive spikes. Let's go back to my regular chart here. So the VIX will have the massive spikes when the market comes down, and the RSI also gets oversold. So all these things are lining up for potential buys in the market. Okay, you have to look at the VIX, you have to look at the fear and greed index, you have to look at your RSI. Things are getting oversold. Most people are panicking down here. This is what everyone starts selling. That is some of the worst times that you can sell because the market is getting very close to making that next move higher. All right, so let's start taking a look at some individual stocks, see what things I'm looking for. And before we do that, let's just quickly look at the NASDAQ, the triple Qs. Okay, this is the exchange traded fund for the NASDAQ. Same thing, it's gone up, and then you have the quick down move. So the NASDAQ's going to look like the SPY, the S&P 500, coming down below the 200-day moving average, getting oversold on the RSI. Same thing for the Dow Jones. This is the diamonds, DIA. If you need the symbol over here in the top left corner here, same thing, coming down, 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 getting below the 200-day moving average. Getting oversold on the RSI, all looking the same. So let's take a look at some individual stocks, and then we can talk about some option trading strategies that you can use to kind of take advantage of these things. So first thing, let's take a look at, I got my list here, which stocks are we really looking at? So good stocks, I mean, all these stocks are getting oversold. This is Microsoft. It was in this channel for a long time. It's got below support here. But is it going to find its footing here? It's somewhat oversold on the RSI, not completely. So I wouldn't say Microsoft is a true buy here yet, because I really want to see a more of an oversold reading on that. Something like Nike has also been coming down. It's coming on support here. So 70 level for Nike. If it could bounce off that level, that could be a good place to potentially step into shares of Nike. Oracle getting oversold well below the 200-day moving average. AMD's just been a bear for a long time here. I'm not looking to get long on AMD. Apple, we love Apple. We just put on a trade in our newsletter for Apple, trying to get bullish on Apple here. It's looking pretty good. I mean, it's really oversold on the RSI, well below the 200-day moving average. Apple's looking for a bounce here. Okay, so I'm keeping an eye on that as well. Let's take a look at some else. Amazon. All these stocks are just below their 200-day moving average. These can be ripe for the move higher, but we have to make sure that the indexes are going to lead first, and then the other stocks will follow. Netflix has actually been doing pretty good. Walmart. Okay, so this is a stock that I really like. I mean, Walmart's a great company. Look at this pullback here. Here's the 200-day moving average getting oversold. Personally, I sold some puts, some downside puts on Walmart, which is a bullish strategy. Sold some way out of the money puts down here, looking for the bounce. I mean, Walmart doesn't come down to the 200-day moving average all that much. And when it does, like it did back here in December, look, it just gets bought back up. So keep an eye on Walmart, one of my top potential bullish plays right here. What else? Disney has had a pullback. Nothing big there. All right, let's talk about Tesla for a minute. Okay, we have to talk about Tesla. Look at the move in Tesla. Before the election, it was trading around 250. After the election, it got what everyone was calling the Trump bump, got up to about $480 or so, and has moved all the way back to about $250. Even got lower than that, got down to about $220. Massive sell-off in Tesla. A lot of people are angry about Elon Musk and in the U.S. politics and U.S. government. It's come off really good. It is certainly oversold as far as a potential buy. You may step in here, but there's a lot of outside noise, a lot of outside news about Tesla. I mean, this thing could keep coming off more. I'm staying away from it. It's just too volatile. Even though it's really oversold, I'm not sure about that. But for you Tesla bulls out there, this could be, a time to step in or at least nibble. It's really come off hard, really oversold. Could be a place for you Tesla bulls to get in. Another stock that I really like, and this is one of my main plays as well. This is Warren Buffett's Berkshire Hathaway fund, the Class B shares. Now, I showed you you can see how the SPY, coming off, and Berkshire Hathaway is, let's pull it up, going up, okay? Do you want to bet against Warren Buffett? I don't think so. Look at this beautiful chart. Now, speaking of Warren Buffett, I have a book. I have an ebook that I wrote. I want to show you the ebook, and we're going to pull that up right here. I have an ebook that I wrote about riding the coattails of Warren Buffett. It's using an option trading strategy that I love. I just put it on Amazon for free here. Okay, so I'm doing this for my YouTube viewers, for my readers of our website. If you want to get this Buffett book and read about an option trading strategy, go to Amazon. I'm going to put the link. I mean, this is a really long link here. I'm going to put the link down in the description below so you can go straight to it. It's free. It's a Kindle version. It's an ebook, but you can get it for free. I'm doing this for the next 5 days. 5 days only. This thing's for free. Okay, until Thursday, this coming Thursday at midnight or 11:59 p.m. Pacific time, this thing goes off from being free. What I ask in return is that if you do get the book, please leave me a review on Amazon. Obviously, I have no reviews yet. That's why I'm offering this for free, because I want honest reviews from people that read it. So it'll help Amazon push my book out there in front of more people. I really want this thing to get seen by a lot of people. So please, if you get it for free, please leave me a review, honest review, okay, whatever you want to say, and that'll help the book get pushed out in front of more people. So that's my Warren Buffett thing. Anyway, let's go back to the charts. Warren Buffett, stock looks great. I mean, how can you bet against Warren Buffett? So it really looks good. What else can I say? I'm a bull on Warren Buffett. Meta, Facebook, coming down to support near the 200-day moving average. IBM, strong stock, only come back to the 50-day moving average. That means it's stronger than some of these other stocks. Google, really far, came off hard, down below the 200-day moving average. So you can see the theme here. A lot of these big popular stocks have all come off really hard below the 200-day moving average. But you can see even here, got below the 200-day and got bought back up again. Here it touched the 200-day, got bought back up again. This is what happens. People panic, fear sets in, people sell, and then it gets bought back up again. These are patterns that happen over and over and over again. Let's quickly go through the rest of the charts here. NVIDIA, everyone's favorite NVIDIA, also has the pullback. It's below all the moving averages, didn't even really get too oversold, but look, it started to rally back up. These things, I'm telling you, once most companies figure out how to handle the whole tariff situation, they will find a way to keep creating their products. People will continue to buy the products. Their sales and earnings will continue to go up. Hence, the stock prices will go up. Yes, we have these blips down, but if you want to get rich for the long haul, you have to have faith in the stock market and you have to buy stocks. Buying them during these pullbacks is really scary. I understand that, but it's also the best time to be buying. You don't have to go all in. Just nibble a little bit, buy some shares on the way down if you can afford it. That's what I'm doing. And then I'm also looking at some option strategies that we're going to talk about in a second. Micro strategy, this is the Bitcoin related one, bounced right off the 200-day moving average. Palantir, same thing. Palantir has been really popular as well. We played Palantir in our newsletter also. It's come down really good. I mean, it was about 125. It came all the way down to 75, lost $50. And then it's well above the 200-day moving average. So it's got support. So we're keeping an eye on Palantir as well. All right, so let's talk about, we looked at the fear and greed index. We looked at the VIX. We looked how things are getting oversold. What about option strategies? What can you do? Well, when we're bullish, we sell put options. That's what we do in our newsletter. We look at stocks that we like, that we're bullish on, and then we sell these out of the money put options. And when the VIX is higher, which has a direct effect on option prices, as the VIX is higher, that means you're going to get even more money for those put options that you sell when you do sell them. So let's take a quick look at, let me pull up the the options calculator here. So this is another free option calculator. You can get option calculators on the internet for free everywhere, but this one's at the optionseducation.org website I like to use. So we put in, here's an option calculator, the inputs on the left and the outputs over here. So we're looking at the SPY, and last price is 562, and we're going to look at an at the money strike of 562 for the May 16, 2025 expiration. And right now the IV, implied volatility, is about 18.61%. It's a percentage number. And that percentage number moves with how, if there's fear in the market, it'll bump up the implied volatility. And then when everything's calm and the market's going up, volatility will come down. Option prices come down as well. So let me tell you why it's a good time to be a put option seller. If you're looking to get long, you can potentially sell put options for a stock that you like, and I'm going to show you a little bit more about what put selling is all about. But here's the IV, and you can change these input numbers. The interest rate, dividend amount, all these things are defaulted in by the optionseducation.org website. You just have to play around with the numbers here. But I want to show you, look at the put option here. The bid-ask value, so this went out around $16.10 per contract based on an implied volatility of 18.61%. Now, this is higher than normal because the VIX has been going up. Now, if you take this back down to normal levels, and the SPY can get down to 10, 11, 12%, let's take this down to 11% and watch how this value will change right here. Changes to 11, hit enter, and things aren't moving. Hang on for a second. Why did that happen? Give me a second here. All right, I was looking at the wrong thing here. So once again, where the IV is 1831, here's the option value right here. I was looking at the bid ask. That's not going to change because the market isn't open right now. Here's that value, just under $16 per contract. If we take this down to more normal levels of IV levels in the SPY, we can see how it's going to change. Okay, so now the value is $9.37 per contract. So it lost over $6 per contract just based on the IV level. Nothing else was changed. We didn't change the stock price. We didn't change the strike price or the expiration date. So the IV levels, if we change this back to 1831, which is where it was before, you can see now the value's back up to about $16 per contract. So this is what I'm saying. When volatility is higher, the VIX is high, option selling strategies are going to work better because most likely it's going to revert to the mean, to the VIX or IV level to where it was before. And the option prices are going to come down just because things are calming down in the market. So now's a good time to be an option seller. So you can sell naked puts. You can sell put option credit spreads. If you don't want to sell naked put options, you can sell put spreads. These are things to take advantage of a market that's oversold and you're bullish on. So selling puts and selling put option credit spreads is what you can do if you're bullish and you want to take advantage of higher implied volatility. Now, if you're still bearish, you can sell call option credit spreads. I wouldn't sell naked calls because that's very risky, but you could sell call option credit spreads. Volatility's high. That helps when you sell options. So if you're still bearish, sell call option credit spreads. Don't sell naked calls. Now, if you're outright buying options is a little trickier right now because the volatility is higher. And if the market doesn't move, or if the market retraces back up a little, those option values are going to come back down really hard. Even if the stock moves in the right direction, the volatility may overtake all the gain you're making on the direction. So buying options when volatility is high is harder to do. Now, you buy when volatility is low. That's a good thing. But right now in this environment, volatility is high. You want to concentrate more on option selling strategies. All right. So those are a couple things that I wanted to point out to you. Now, remember, if you're selling put options, you want to sell put options on stocks that you really like and that you're bullish on because you may end up being assigned the shares. Now, if you know nothing of what I'm talking about, let's go back to our website. Okay, so this is the Smart Option Seller website. If you know nothing about put selling, get our free ebook right here. Click on it. This is our free ebook, Put Selling Basics. If you don't know anything about put selling, get our free ebook, scroll down. You can put your name and email address in here. We'll send you an email back with a link to a free copy of the book. You can learn about put selling. I'll also put links down in the description here. If you want to go even deeper into what Put Song's all about. You can click on our video series here. This is a 5-part video series, about 5 hours long. And you also get 30 days free to our Put Selling newsletter and a bunch of other goodies as well. So you can scroll down on that page. Lastly, if you want to see our services, we have 2 newsletters. We sell naked put options and we sell put option credit spreads on stocks that we're bullish on. We're very conservative. We sell deep out of the money put options. We have our one-on-one coaching sessions. If you need help, if you need a leg up, you want to learn a little bit more about options, we can do some coaching, and we have our probability calculator. Just click on any one of these things. All right, that's all for me today. I hope this has been helpful. Just wanted to show you the charts and look at some stocks and see what's good out there. I'm personally getting bullish only because of the history of these stock moves. Market's pulling back, getting below that 200-day moving average. RSI is oversold. The VIX is spiking. The fear and greed index is in extreme greed. These are all signs pointing to a market that's getting ready to move back up. All right. Please give me a thumbs up. Please give me a like. Leave a comment. Look in the description below. I've got links and books and other websites for you. I'll put the link for the ebook in there and the Warren Buffett book there. Don't forget that Warren Buffett book's free for 5 days. Make sure you get on and leave me a review if you would. All right, that's all for me today. Make these free videos for the trading community. We all want to help each other to become better traders. All right, I'll see you all in the next one. This is Lee Lowell signing off.